every millionaire in the world couldn't even own one Bitcoin. I mean, as an example, there are 54 million millionaires in the world. There are 21 million Bitcoin. So if you own one Bitcoin and this becomes money, you're kind of almost by definition a billionaire. Just even if we just adhere to the power law, I mean, we're going to have $1 million a coin in 10 years, and that's going to be meaningful. But we could have $1 million a coin a lot sooner than 10 years also, if we hit that tipping point. If we truly are in that phase where, we go from 10% of the population to 90% of the population, we might break the power law and exceed it to the upside. And I think that's clearly one of the possibilities.
Okay, so today I'm thrilled because I'm joined online with the one and the only Larry Lepard. I had the pleasure of briefly bumping into you in El Salvador this week. How you doing, Larry?
I'm doing great, thanks. Very nice to be with you. I think it's the first podcast we've done together, so it's great to join you.
It is our first podcast we've done together. That's why I think it would be a good idea for maybe some of the new people who might not be familiar with you. Maybe you can introduce yourself and tell us a little bit about your background before we really get into it.
I'll do it really quickly because I think most people probably know. But so I'm in the United States. I'm a fund manager. I'm a sound money guy. I've always been a sound money guy for 30 years, which means pre-08, I was a gold guy. Actually pre-08, I was actually a venture capitalist, invested in technology companies for most of my career. But 08 radicalized me for sound money. When they did the bailouts, I thought, oh, this is wrong. And I could see what was coming, that they were going to continually dilute the currency. And of course, they've done that. And so I pivoted my venture capital investing to be solidly into the gold and silver space. And I started paying attention to Bitcoin, but I didn't get really involved. I didn't buy any until 2013. And my logic was that, as a gold guy, we'd actually seen this. Some of you younger guys may not remember, but there were attempts to do digital, money for quite some time. There's something called eCash. There was eGold. There was BitGold, which Nick Szabo did. There was B-Money and Hashcash. So these were all attempts to do what Bitcoin does, and they all failed. They didn't have the right technology. They didn't have all the pieces in place. For a variety of reasons, they didn't work. And so when Bitcoin first came along, my initial reaction to it was, that's great. We need non-state money, neutral reserve money, blah, 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 but it's not going to work. And because these others have, I was just doing the heuristic of this other shit didn't work, so this one won't work either. And I didn't really understand that it was different. And of course, I came to understand that, but it took me some time. But anyway, I now manage these two funds. One is very focused on gold and silver mining, which over time I'll be transitioning out of because I think that Bitcoin is a superior alternative to gold and silver. But not so superior that gold and silver are gonna go down in value. They will continue to increase in value. I just think Bitcoin will increase more rapidly. And so I also have a fund that's focused more on Bitcoin, and I'll be trending in that direction over time.
Well, I don't know what direction you want to trend in over the next few years. I think you're doing great because gold and Bitcoin are both at all-time highs today. So it really looks like people are desperately trying to find some sort of store of value, whether it's the analog version of store of value being gold or the digital version of store.
I think that's right. I mean, what we're finally starting to see, and I've been screaming at this problem for 30 years and nobody cared. And it's now starting to get very acute. And this is because the U.S. has really put themselves in a very dangerous position in terms of the level of debt, the level of interest cost, et cetera. And, you're now seeing it. My most recent quarterly, which is on my website and it's free, talks about this, how really worldwide awareness of the problem, and the problem being, too much debt, too much money printing to cover the debt, is spreading. And as it does spread, people naturally say to themselves, okay, I need to invest in things which the government can't print. And so, gold and Bitcoin both fit that model. Real estate does too. And some tech stocks fit that model. I mean, obviously NVIDIA's done well, and there are other high quality tech stocks that people have owned, and they protect against debasement as well. But to just hold your money in cash or in bonds is obviously a very, in my opinion, suboptimal investment approach today. And bonds have just gotten killed in the last 4 or 5 years. I mean, the 20-year bond has lost 40% of its value, which barely, the 4% interest barely makes up for a fraction of what it's lost. So yeah, I mean, it's the problem is becoming very acute, and I've always been kind of screaming at this. I mean, now I'm screaming at the top of my lungs because it's like, come on, folks, you've got to get into this stuff because it's going to get worse, sadly, you know.
I couldn't agree more. The problem's only getting worse. And for
Yeah,
someone to identify the problem before 2008, being a gold guy back then, that was very, very early.
yeah, it was. It really was. And by the way, you know, Makers was wrong. I mean, you know, it's like, you know, gold went from 250 in 2000 to 1900 in 2011, and then it corrected from 1900 down to 1,000 in 2015. So, you know, you've got kind of, I mean, it's been trending up. I mean, we're never going back to 250. I don't think we're ever going back to 1,000, but you know, you get these big waves of up and down, up and down. And interestingly, Bitcoin's had the same kind of trajectory, right? I mean, you know, it goes from 15,000 to 68, and then it comes from 68 back down to 15. But each, you know, you get higher, generally speaking, we're getting higher lows and higher highs with each wave of inflation. So, or debasement, as I call it.
Yeah, that's a great point. Now, you've kind of brought up the problem nice and early in today's chat, and I wanted to actually talk about your pinned tweet, which is a tweet from 2019. And
Yeah.
do you remember the tweet, Larry?
Oh yeah, I remember very well. I mean, to me, it's just so obvious, and it's simple, and it's kind of elegant, and it goes to what's I often refer to as Stein's law. There's a Nixon, the Nixon administration had an economist named Herbert Stein, and he made this statement. It's rather simple tautology. He said, "If something cannot go on forever, it will end." And it's kind of obvious, right? And the chart, the pinned tweet, I'll describe it for people, or you could too, but bottom line is what it shows, it's on Twitter. What it shows is that the rate of growth of the debt is vastly exceeding the rate of growth of the GDP you know, that it gets generated, GDP being the kind of the productive capacity that creates earnings that allow you to pay interest on the debt and perhaps pay the debt back someday. Of course, that's not likely. And so, you know, that problem, when it started off in 1971, you know, the numbers were small enough, it really didn't matter. And you could add debt and GDP would grow, and the fact that there was a difference wasn't a problem. But we've now gotten to the point at which the GDP, you know, the debt is growing very rapidly, you know, and GDP is, I mean, as an example, right now, debt, it looks like it's growing about 10% a year, the US federal debt, and US GDP is growing about 2.6% a year. So that's a problem, because that GDP is what's used to pay that debt. And at some point, there's going to be a day of reckoning. Now, you know, we've had some quasi days of reckoning. I would argue that 2008 was one of them, and that 2020 was another one. Those were the two big ones. We've had some smaller ones like the Silicon Valley Bank failure, which created a ripple, or the repo blowout in 2019. But, you know, the system is straining against this problem, and it really hasn't been resolved. So it's, you know, and it's, you know, Reinhardt and Rogoff did a paper. These are two well-known economists, and they showed in, like, you know, 50 some odd countries that had debt to GDP of north of 130%, and we're at like 125 right now. In almost all those cases, well, in every case but one, and the one is Japan, which it could have a problem, hasn't yet. Ultimately, you have very high inflation or hyperinflation, or, you know, a debt default. And those are kind of the three choices. So it doesn't, you know, history suggests that countries that have done this, the outcome's not good. And so that's why those of us who are in this sound money camp, you know, are trying to warn our friends and family and people who aren't aware of what's going on in this area of the, you know, the potential problem. And, you know, the difficulty is, I mean, I've been, you know, I'm kind of like the boy who cried wolf, right? Because I've been warning about it for 20 or 30 years, and it hasn't happened yet. I mean, it's kind of happened. I mean, 08 happened and 2020 happened. They print a lot of money, but the big one hasn't happened yet. And I'm not sure the big one will happen, but I'm pretty sure that they will continue to debase the currency, and that we are not out of the inflation problem that's got started in, you know, 2021.
I agree. And I certainly do think the big one is going to happen because of that paper you just referenced. I think a really kind of important part about that paper is, I'm not sure if I've seen the same one. I've seen a similar one, but the one I saw was saying that there's like a 98.6% probability of government default happening within 15 years of that country reaching the 130% debt to GDP ratio.
I
Now,
think that's right. Yeah.
now, we both have like very accelerated timelines or views of how this system could transition. And this could maybe relate to another topic I want to talk about with you today, and that is
Sure.
Bitcoin's technological adoption curve and
Yeah, yeah.
where we are in that curve.
No doubt. And I think you've got some things you want to pull up, and I've got a chart I want to pull up. I mean, what I would reference is a book written by Malcolm Gladwell called The Tipping Point. And it's a really interesting kind of sociological explanation or examination of how new things get adopted into society. And what it suggests is that a new innovation comes along, and there's a period of time where the innovation is kind of getting ironed out and figured out, and less than 10% of the population is using it. And then when you hit 10%, you kind of hit a tipping point where it's like, oh my goodness, this is real and it's big and it's important and it's a change. And then the curve gets very steep in terms of adoption. And within the time that it took, his law is that the time that it took you to get from 0 to 10%, the number of years will be about the same as the time it takes you to get from 10% of the population using it to 90%
Mm.
of the population using it. And so, as I think you're going to show, and I can show with a chart as well, it appears, and the measures are fuzzy, right? We don't know exactly what percentage of people are using Bitcoin, but in my estimation, we're kind of rapidly approaching that 10% point. And I mean, there's probably not many people in the developed world who haven't at least heard of Bitcoin. They may not be using it, but they're aware of it. And that's going to grow, and I think accelerate.
Could not agree more. So for the people viewing it, I would have already popped the chart of the technological adoption curve up on screen. Now I want to talk a little bit more about a chart that we were discussing offline. And that chart was looking at quote unquote crypto adoption in countries all around the world. And I was pretty shocked at some of the statistics on that chart that you showed me, Larry, because it kind of confirmed what a lot of people believe. Bitcoin adoption and, quote unquote crypto adoption is a lot higher in countries like Nigeria and India and a lot of these developing countries. And look at that, you've brought it up. Maybe you could tell the listeners what we're looking at here.
Yeah, it's a little fuzzy because I took a screenshot of this, but what you're looking at here is a chart that has countries listed on the left. And then the population that are using, and they define it as crypto, which, I don't like the term crypto, really like Bitcoin, but you have to assume that within crypto, a lot of it's Bitcoin. And then the right, so that's the blue bar, the number of people who are familiar with crypto in that particular country. And then the right bar is the share of the adult population in percentage terms. So for example, in India, 299 million people have used crypto, and that represents 29% of their population. China is very low. They're at 931 million, 8%. Actually, I think it's 93.1, that's 8%. But go down to the bottom to the bigger countries, you can see Canada's at 14%, Poland 15, France 9, UK's 11, Italy is 12, Spain is 17, Japan's low at 7. Pick the United States, which I think is in the middle, or no, come close to the top. Actually, 16%, excuse me, of the population. So, excuse me, I'm about to sneeze. Basically, I think if you look at this and you kind of average it out, I think one could say we're share of adult population in all these countries, it's got to be averaging 10%, right?
Mm.
So that back to your chart of, when we get to the 10%, the acceleration takes place. I think, we're coming to that point, and that's the way it feels to me too. I mean, press and just everything. I mean, you see it being talked about on CNBC. I mean, this is now a part of the conversation. I mean, I don't think everybody, certainly not everyone owns crypto. In fact, less than 10% of the population owns crypto, but it's the awareness is there. So I'll stop sharing. Maybe you can share yours again, because I thought yours was very good. The, kind of the curve, share just, how those other technological innovations, you put that up?
Yeah, so it's fascinating because I found this chart many years ago, and it was actually you, Larry, who put me onto this chart, and it sent me down such a rabbit hole that I think I wrote like a 8,000 word article or paper on this very topic, comparing Bitcoin
I
to.
don't know I don't know what my source for this was, but it's very interesting. I mean, it kind of, you look at automobiles as an example, they were kind of invented in 1900, And in 1914 or so, 10% of the population had an automobile. Well, by 19, and so this is 14 years. By 1928, 90% of the population had an automobile, and these are all fitting into that law that I spoke about, the Malcolm Gladwell law of the time it takes to get to 10% is equal to the time it takes to get to 90%. And so and by the way, I've seen this on other things too. I mean, washing machines, I mean, you name it, any technical innovation tends to, PCs tends to get adopted in this fashion. And as you can see, Bitcoin, that was, we were below 10% in 2020, but I think we're crossing 10% now. So that whereas and in fact, Michael Saylor was speaking in Madeira, and I was there, and I heard him say that, we really are in the sweet spot. I mean, this is kind of the next 10 years is going to be kind of the Bitcoin gold rush, from 2024 to 2034. The entire world is going to come to embrace this thing, and I think he's right. I really do think he's right. That would be kind of that would fit the model as I understand it.
That's how I understand it too. Now, I want to come back to models later because I want to briefly touch
Fair enough.
on
Yeah.
power law models. But you brought up Michael
Oh
Saylor.
yeah, yeah.
Let's firstly touch Michael Saylor because I have two questions about Michael. Let's begin with your panel discussion in Madeira with Michael Saylor because I was there and I watched it and I absolutely loved it.
Oh,
How did you find that panel? Did you
well, I was like, as I said in the beginning, I mean, it's like I'm playing soccer with Ronaldo and Messi, I mean, it was pretty intimidating for me to be on stage with Lynn and Michael because they're, geniuses and I'm just kind of an investor. But it was great. It was very interesting. I mean, we all bring different perspectives, right? I mean, they're both engineers and they bring such engineering brilliance to the understanding of what's going on here. I'm more kind of a traditionally trained investment manager, and I kind of look at it through an investment manager's eyes. And so we see slightly different things, but I think they all support the case for adoption. And I think the anecdote that I told in that particular clip, if people haven't heard it, was that this is very similar to, in '83, I was fortunate enough to meet Steve Ballmer when he was just starting off at Microsoft because my business school roommate was friends with him. And he said, "Hey, Larry, this thing is the base layer of computing, and everyone's going to have a PC in their house. They're probably going to have more than one, and they're going to need, the base layer of the software. They're going to need that, and Microsoft supplies that. And this is going to be a billion-dollar company selling hundreds of millions of copies of this software." And it just kind of blew my mind. I thought this guy's a little crazy because at the time the PC had just been introduced, and it was really good for two things. It was good for word processing. It kind of replaced the Wang word processor, and it was good for a spreadsheet. Lotus 1-2-3 was the predecessor to Excel. And I couldn't see, and very few people had a PC at that time. And so I couldn't really foresee how, it was going to become so ubiquitous, but he could. And 40 years later, he's right. Everybody's got a PC. Everybody uses MS-DOS or, the Apple equivalent. And, I kind of think that you can kind of map it, it's a network and it grew exponentially over time. And I'm kind of like, I'm determined not to miss this one because I think Bitcoin's the same thing. I mean, I can, 40 years, everything's going to be denominated in sats because what we've got here is a form of money that's superior to government money. And if you look at history, the best technology always wins. I mean, when, as Safe says, when gunpowder got invented, people kind of stopped using spears and axes. They started firing bullets, and so, this is a form of money that can't be printed. It's sounder than anything a government can create. And it's super easy to transfer and move around. And therefore, I think it's destined to become the base layer of money. Now, is it today? No, of course not. 10% or less use it. It's slow in a traditional sense, in the sense that 10 minutes to settle. And it's expensive compared to, I mean, you don't buy a cup of coffee with Bitcoin because the on-chain fee is too high. But that's why there's a layer 2, and that's why there's Lightning and all these other solutions. I mean, just as I recall very clearly my boss back in '83 saying, "Yeah, these PCs aren't that useful. I can't see where this is really going to go." And what you could see was that Moore's law was happening on the microprocessor. You just knew that every year the stuff was going to get better. That we're going to get graphic cards and graphic user interfaces, and it just, one thing after another was going to make it all better. And I think the same is true of Bitcoin. Bitcoin will become much, much more, ubiquitous and easy to use so that, my mother can use it. I mean, right now, my mother's not going to do, she's not going to store shit on a Trezor and do on-chain transactions. It's just too complicated. But that functionality will be available to everyone for pennies at some time in the future in a very easy way and in an idiot-proof way. But, it's going to take 5 years, 10 years to fully roll that out. So, but I can just, I can see it clear as day. And I think Lynn and Michael see it as well. And so, my view is if there are a limited supply of these things, 21 million, it's kind of like you want to own them and, avoid the rush, buy now because they're going to be more expensive in the future. I mean, I often talk about how much fiat money there is out there. And I talk about, I mean, as an example, there are 54 million millionaires in the world. There are 21 million. I mean, every millionaire in the world couldn't even own one Bitcoin. So if you own one Bitcoin and this becomes money, you're kind of almost by definition a billionaire, or I mean a millionaire. And you can buy a Bitcoin today for 64,000, like a couple of weeks ago for 70,000. So, which is a lot of money, but it's not, it's not out of the reach of people who have savings. So, or many people who have savings, I should say. So, yeah, it's to me, it's pretty obvious where we're going, and how we get there is a little less clear. I mean, it depends on how much the Fed prints and how quickly and how steeply this occurs. I mean, one thing that is a little different, I've talked about this in other podcasts, is we live in a very digitally connected world, and word travels quickly, and information travels quickly. And I mean, look at us talking, continents apart and video streaming one another. I mean, you couldn't do this even 5 years ago. So, the adoption could happen even more quickly than we think. I mean, we just don't know. I mean, the example I've cited, is that, and it was very interesting, when you kind of get a phase change in how people understand things. The example I've said is Silicon Valley Bank. So I actually, they were my bank. I used them. And, one day in March of 2022, or maybe it was 2023, I'm sorry, it was 2023. And one day they were fine, and then they had to sell some bonds. They sold them at a big discount, and some accountant did the math on that sale and said, oh, if I do this and apply it to their entire portfolio, this bank has a negative net worth. And that means it's in trouble of going out of business. And the FDIC only insures 250,000. Well, he told a venture capitalist in Silicon Valley about that. And that guy, they played the telephone game. That guy sent out an email, blasted out an email to all his portfolio companies, all his friends. And Silicon Valley Bank had about $100 billion in deposits. In one day, $48 billion of deposits were withdrawn from Silicon Valley Bank. One day. So this was a digital bank run. And, I mean, we're talking about, I mean, this was a week from the time when they sold the bonds and somebody realized that they had trouble to the time when they said, we're bankrupt and the FDIC has to take us over, was 1 week long. So, and what changed in that week? Well, the knowledge that they were bankrupt became manifestly evident to everybody in that 1 week, and that's what created the change. Well, I mean, how hard is it to extrapolate to something similar with the U.S. federal government? I mean, they have a failed bond auction. The yield repo rate blows out like it did in 2019. Interest rates shoot up very high in an uncontrollable fashion. The Fed steps in and says, we're going to buy these bonds. And in order to do so, we're going to print, I don't know, 5 trillion, 8 trillion, 10 trillion. I mean, doesn't that send everybody thinking to themselves, holy shit, there's no limit to how much they can print. And having studied hyperinflations and the history of hyperinflations, I mean, hyperinflations and high inflations, and I don't like the word hyperinflation because it implies like a doomster mentality, and I'm not a doomster, but these things do occur. I mean, and it is, you have to consider it's one of the tail possible outcomes. And they tend to occur when everyone comes to the conclusion that, you know what, I can't trust this government. They are never going to stop printing. Get me out of here. And that's what we all, in Austrian terms, define as Gresham's law, which says when your money is losing value very, very rapidly, you exchange it for money that's not losing value. And it's funny because Americans are very unfamiliar with this and haven't really thought about it. We've had a generally stable currency, since World War II. We won that war and a lot of things. And we haven't had hyperinflation since, we were founded in '89 when the Continental hyperinflated. And so the bottom line is, Americans aren't very tuned into this, but people who live in Argentina or, people from the Eastern Bloc countries or people from Venezuela or Zimbabwe, I mean, other people from other countries actually get it a little more than the average American gets it, that, it's possible for your government to be so irresponsible that your currency becomes worthless. I'm not suggesting that will happen, but I am suggesting it's one of the possible outcomes.
You know what, Larry? I'll go on record and I'll suggest it's going to happen because I think it is.
Okay, you may be right. You may be right. Look, to be honest about it, I sincerely hope it doesn't happen because it caused a lot of societal pain. I mean, I'd like to see us just transition to a sound money standard without that event happening. And, people in the Bitcoin, I mean, this is why I think Michael Saylor emphasizes this is digital property, not this is a replacement for the dollar, because he really doesn't want to get into a fight with the US government. And I get it. And neither do I, but the point is, it's there could come a time when this is the dollar is threatened by this, no doubt. I don't think we're there yet, but it's one of the possible outcomes.
And I agree. I think Michael's been very smart with how he approaches
Absolutely.
framing Bitcoin. Now,
Yeah, absolutely. I mean, he's doing what's politically correct, and it's smart for him to do it that way, and I applaud that. But guys like you and me, I mean, nobody listens to us, so we can say whatever we want.
it's a great
And
position
I think
to be in.
I think he honestly knows that ultimately we will. I mean, here's what I think will happen is we will be on a SAT standard. I really do believe that. I think, that sandwich costs 30 sats and that house costs, 200,000 sats. And I mean, whatever, everything will start getting priced in sats at some point. Now that might be 20 years away, but I think that's where what we're trending toward. I really do.
And this idea of everything being priced in sats relates to what we talked about earlier with the fact that there's like 50 million millionaires and they can't all own one Bitcoin. So
Well, that's right. That's exactly right. I mean, there just aren't enough of them.
So speaking of Michael Saylor, I heard you in a recent interview, Larry, talk about the potential of him maybe being the president one day of America.
Yeah, I'm just spitballing here, okay? I mean, I got to meet him and I was on the stage with him and I've talked to him, and I mean it's like meeting Edison or Ben Franklin or something. The guy's a genius, and I sincerely think there's a good chance he's going to end up the wealthiest man in the world. Not that that really matters, in monetary terms. And it's very clear to me he's on a mission, and he's a libertarian. It's very clear to me he wants to make the world a better place. And yeah, maybe I'm dreaming a little bit, maybe I'm hoping. I don't know if he's got the willingness to do it because it's an ugly job, but he'd make a great president. He certainly understands the issues, things that are wrong with this country. He is a genius, and we really, you look at the leadership that we have, the political leadership that we have in this country, it's just abysmal. I say you could do better picking people out of the phone book and randomly. And so yeah, I mean, I think it's entirely a possibility. I mean, he is on a mission. I think he's going to be a historical figure. I really do. And I think it's possible. I mean, now this is probably, 3 or 4 presidential cycles away. But if what you and I believe might happen to the financial system does occur, I think people are going to be reaching out and saying, help, what do we do? And, there'll probably be some bad guys offering, demagogic solutions, in the same way that, Hitler offered that to the German people after their hyperinflation. But there'll also be some good guys who'll say, hey, look, this is really just this is just a case of where you messed up the monetary system. If we return to sound money, and that's the one thing that I will point out, and this is why I'm very optimistic and I'm a positive person about the world and, not a doomster. When we return to sound money, things are going to get better a lot faster. We got a great world, a great country, lots of smart people. And the average human being doesn't want to kill anybody else. They just want to go to work and make a living and take care of their family. That describes probably 95% of the world. And then there are 5% who are psychopaths. And sadly, some of those psychopaths are in power. But, if we make them all poor because fiat becomes worth a lot less than it is now, and we make all the Bitcoiners rich, well, the Bitcoiners are going to have more power and they're going to be able to elect people that are, thinking broadly about how to make society better.
Mm.
And some people shit on Michael. I don't. I think he's a good human being. I think he wants to make society better. And so I think he'd be an excellent president. I think there's a chance that's what he's in the back of his mind.
Hmm. And as
Uh,
do I. Like, I don't think there's somebody who's as well read in history as Michael is.
oh
He,
yeah, no, it's kind of stunning. I mean, like I say, he really is a genius.
Mm.
I mean, just sitting and talking with him, I mean, he could just, it's, and he takes great pride in it. I mean, he's competitive, and and as he should. There are very few people that have the intellectual capabilities that he has. Very, very, very few. And and I actually think his heart is, it's in the right place. I think he wants to make the world a better place. And so, I hope he does volunteer to serve in the role that I'm talking about. Whether he will or not, that's up to him. He may not be interested in it, but I know I'd be interested in having him be president, because I think he'd do an enormously better job than everyone who's in there now.
So do I. And I think as we kind of transition to Bitcoin, I think it's going to be natural that people really want Bitcoiners to be in leadership. But kind of talking about this transition to Bitcoin, we briefly talked about a model earlier, the power law
Yeah,
model, that kind of, it projects what it thinks is going to be the transition to a hyper Bitcoinized
right.
world. I
Yeah, and so there's been, it's so funny because Bitcoiners can argue about anything, and I've seen, some people. So along comes a guy, an Italian mathematician, and then there's a U.S. mathematician named Fred Krueger, and they both kind of, what they've identified is that backtesting the data, the Bitcoin price actually tracks very carefully on a log scale, to the power of 10, to the power of 6, and the fit on the price data going back to inception is, like an R squared of 97, maybe it's 93%, but it's in the 90s.
Mm,
And anyone who's into math and statistics knows that getting a fit that tight is pretty rare.
mm,
And which, would then imply that you could, project out where it's going to go. And I think perhaps you can. I mean, I don't, I can't, I'm not willing to sit here and say I believe in the power law, uber alles, and there's no other way of looking at it. But I don't think you can just discard it. And it's quite positive if you look at the implied prices, and I've got some charts and so forth that show that it's going to continue to, kind of every 5 or 6 years, go up by a factor of 10x. And so I take that into account. It also varies a lot around the mean. You get these runs, often driven by a halving, that shove it well above its 200-day moving average, and then you get the collapses that bring it back down to below its 200-day moving average. But in general, the trend is very strongly up. And so to me, the power law is a useful piece of data. And I know some Bitcoiners say, well, all your models are broken, you can't have them out. Fine. Okay, great. Look, I'm an investor, and if I see something that from a data standpoint that has been predictive looking backwards, and therefore might be predictive looking forwards, I find that useful. I'm not saying it's definitely the explanation for what the price is going to do, because one thing that argues against the power law is the Gladwell tipping point thesis, that if we truly are in that phase where we go from 10% of the population to 90% of the population, we might break the power law and exceed it to the upside. And I think that's clearly one of the possibilities. So I keep both of those ideas in the back of my mind. I know Bitcoin is going higher.
mm,
um, but honestly, I don't know, I don't know the path. And anybody who's been in this space for a while knows that, if you try and predict price on this thing, it can really humble you. I mean, you can be absolutely convinced it's going to go up and it goes down, and you can be absolutely convinced it's going down and it goes up a lot. And so, it's a little bit of a wild beast. And so, thus the phrase hodl. I think you buy it and you hang on to it, and knowing that, given enough time and letting time and adoption do its thing, it will be much higher in
mm.
5 years and 10 years and 15 years. How much higher? Look, we don't know. We just don't know. We've never really seen anything like this before. I mean, as you know, and as I think many have pointed out, this is a commodity that does not respond to higher prices with greater supply. You know, if the price of gold goes up, we'll mine more gold. The price of oil goes up, we'll drill more oil. Wheat goes up, we'll plant more wheat. We know the supply of this thing from now until forever. You know, it's asymptotically decreasing till the point where we get to 21 million of them in 100 years. And so, um, you know, the price can go up a lot and the supply stays the same. That we've never seen anything like that. And that's why you know, that's why it's traded the way it has. And so, you know, we're all kind of trying to get our heads around it, and it's hard, you know. But you know, all the religious wars about, you know, this model works and that model works and this is shitty. No, I mean, my view is they're all worth discussing and looking at and thinking about. You know, will it work? I don't know. You know, but it's not. I don't think I don't think you can casually discard it, I guess is my point.
I think it's a great point, and I think I probably side with you there. I think all models are useful to look at and analyze, and if it brings someone new into the space, I think it's cool. But if I had to pick one, I think I'm more of a, you know, the tipping point, exponential adoption. That's kind of, I'm one of
I
those
agree with you.
maximalists.
I
Yeah.
agree with you. I think there's a good chance of that. And so for that reason, and if that's the case, the power law model is going to break. You know, it's not going to be accurate. So, you know, look, they're both good. I mean, just even if we just adhere to the power law, you know, I mean, we're going to have $1 million a coin in 10 years, and you know, that's going to be meaningful. So, you know, but we could have $1 million a coin a lot sooner than 10 years also, if we hit that tipping point, in my view.
We
I mean,
could.
I love Samson. Samson thinks we're going to have it in next year. Right? To be frank with you, I really hope he's right. But, you know, who knows?
I love Samson. We interviewed him here on the channel a few weeks ago to
Yeah.
discuss that. It's
Yeah, I
fascinating
mean, he
thesis.
makes a good argument for it. I mean, I can't, you know, I can't discard it, right? I mean, none of us can. Look, we're all playing in a new space that we don't fully understand yet. I mean, you know, so this is a new invention, right? It's a new technology. It's a new invention. I mean, think about it. When, you know, when the printing press got invented, the only people who knew how to read were the priests, right? I mean, the average person didn't even know how to read. But they invented a printing press, and now they can, you know, they don't have to hand copy every copy of the Bible. They can actually make copies, and that led to people learning to read. And then, of course, you got, you know, libraries full of reading material, right? I mean, who could have foreseen that when the printing press was first invented? You know what I mean? And you know, I think that's a good analog to what we're talking. Or even when the microprocessor was first invented, who could have foreseen that, you know, you and I would be talking continents apart, you know, in real time over a broadband channel on the internet? I mean, you know, you just and so this is a similar thing, right? They've invented this new form of money that's digitally sound, digitally scarce, easy to use, easy to transfer. We cannot, in my opinion, we cannot really foresee all of the good things that it's going to do for us, but I'm pretty sure it's going to do a bunch of good things.
I agree. And technologies are so difficult to grasp. That's why I think it's really important to try to like send a new person a little bit of signal and kind of like, because I know a lot of people, they look at these models, or some people might listen to traders and they might think that trading in and out of Bitcoin is a good decision. But I think we were kind of talking off air, how it's very important that new people just stay focused. Dollar cost.
Absolutely. This is really important. I mean, I've watched this ecosystem for now 10 years because I started in 2013 or 14. And, you know, how do people get in trouble in this thing? Two ways. One, they lever themselves up. You know, I know a guy, you know, remember when Plan B had his model, we were going to 150 immediately. And, you know, some guy, you know, believed in that, and he took out a loan of 3 Bitcoin. He had one. And of course, we had a big correction. Boom, he lost his one. You know, he got margin called and lost his one. So, you know, leverage is dangerous in this whole area. You cannot be leveraged. You've got to have, you know, full skin in the game. And then the second thing I think that happens, and it's incumbent upon all of us as Bitcoiners, is we try to orange pill our friends and we get people involved, is to make people aware of this is a hold forever asset, and to make them aware of, honestly, and be open about the fact that there are big drawdowns. There have been big drawdowns, you know, 60, 70%. And I often say to people, look, when you're buying this thing, you know, you've got to understand that there's some chance it could go down 50%. And if it did, your response should be, I'm going to buy more, rather than, oh my God, I made a mistake, I'm going to sell. Because the other time I've seen people get hurt is when they don't fully understand it. They buy into it at a high price, like the last rip up to 68,000. Then Sam Bankman-Fried happens, it goes to 15. They feel like shit. You know, they think they made a mistake and they sell it. You know, whereas if they just hung on to it, they ultimately would have been fine. But so I think it's important for all of us as we tell people about it to make them aware. I mean, we don't want people who are going to rent Bitcoin. And actually, that's with the ETFs. I worry about that a little bit too. That some people are going to buy this thing in the ETF. They don't really know what they've got, you know, and it's going to go up. Maybe they'll have a profit. They'll sell it, which would be a mistake, you know, or they'll get a big drawdown and they'll sell it, which would be a mistake. I mean, it really, you know, it's very important to let time do its thing here. It's working and it's going to continue to work, but with a lot of volatility.
That's some great actionable advice to end today's interview on. Larry, do you have any other final comments of things we might have missed? And would you
No.
like to tell people where they
No,
can
not
find you?
really. I mean, the one thing I would say is, you know, this one of the things driving its adoption and what's going on here is kind of the macro story. We haven't talked much about that, how messed up the federal government is, how messed up this debt picture is. And so you can get some information on that for free if you go to my website, which is EMA, Edward Mark Alpha, the number 2.com. That's the firm I run. And on there, you'll see, just click on quarterly reports. And every quarter, we write a report that talks about macro factors. And it's free. And if you put your email address in there, we'll send it to you every quarter. We'll never spam you. All you'll get is this report once a quarter. And so that goes into a greater detail on kind of the, you know, the blocking and tackling of, you know, money being debased, which is pretty, you know, it's pretty outrageous. I mean, you know, the one of the things we talked, I mean, the most recent one that we just published is kind of amazing. I mean, you know, the U.S. added $100 billion, no,
1 trillion?
$100 billion of debt. Yeah, no, hang on.
$1
$1
trillion in
trillion
100
of
days?
debt in 100 days. Yeah, I want to make sure I get
There
that
you go.
right. Yeah, $1 trillion of debt in 100 days. So that would imply that they keep that run rate going. That's $3.65 trillion will be added to the U.S. debt in the next year. I mean, that's just, to me, it's just stunning. And that's about 10% of the current debt balance. And as I said, GDP is growing 2%. I mean, this is so messed up, and it's really, it's critical. I mean, I kind of say, you know, don't walk, run, you know, to get your assets in sound money, because, you know, we're getting to the stage here where it's really going to start to happen, in my opinion.
I agree. Things are happening exponentially. I would encourage everybody to grab out their phones and scan the QR code I'm going to put on screen. That's going to take you straight to Larry's
That'd be great.
report that we're
Yeah.
discussing right
Oh,
now.
that'd be really great. Yeah, thank you.
No worries. Larry, thank you so much for your time today. I really
Oh,
appreciate
you're most
it.
welcome. Anytime, Luke. I'd be happy to come back on your show. I really enjoyed what you've been doing. So thank you.
Thank you, Larry. Thank you so much. So we really hope you enjoyed that interview with Larry Lepard. If you do want to learn a little bit more about the Bitcoin power law, you guys are in luck, because we recently had an interview with Fred Krueger and Preston Pish. In both of those interviews, we discussed the Bitcoin power law at length. I will pop links to both of those interviews up on screen somewhere around there and over there. Really hope you guys enjoy those videos I popped up on screen. Really hope you enjoyed this video. Let us know in the comments down below what you thought of it. And with all that said, we will see you guys in the next video.